Welcome. You're listening to the Best of Investing, sponsored by Pacific Trade Exchange. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience, listening in. I'm your host, Edward Brown, and I'm honored to have as my co-host Mark Hahn from Pacific Private Money, California's fastest growing private lender, and Brian Burke of Praxis Capital. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is movies with gangs in them. Ooh, scary.
Colors.
Okay, oh yeah. Now you're giving away all the answers.
Oh,
no, that's
yeah,
not one of them.
get ahead
Okay.
of myself.
Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also recording this for television. We're in Channel 26. We'll find out when it's going to be recorded or aired. So just keep checking Channel 26 all the time. And if you want to record our show in the future, use a website called dar.fm and type in the Best of Investing. Last reminder here, World Wraps in Corte Madera in Santa Clara is still giving our listeners a free smoothie with the purchase of a wrapper bowl if you mention the Best of Investing. Go there for lunch today, best wraps in town. Okay, we have a special guest, and his name is Bruce Raabe, and Bruce is president of Collins & Company, which is a registered investment advisor, and he's also a chartered financial analyst, and he went to my alma mater, Golden Gate University. Bruce, welcome to the Best of Investing.
Edward, thank you for having me today.
Okay, you're very welcome. All right, what pearls of wisdom are you going to share with us?
Well, you know, Edward, I spent the last 2 decades working with families in the Bay Area and private foundations, helping them craft wealth management plans and investment strategies that help achieve their long-term goals. And one thing I've noticed is people are not good at planning their investment strategies. And I often think of the Costco analogy. I'm not sure if you ever go to Costco. Have you been there?
Sure,
It's
of course.
a great.
Hey, that was my first date with my wife.
I love Costco.
I said, hey, baby, I'm taking you out to dinner. Let's go to Costco.
The beauty of Costco is you walk in and everything you see, you just have to buy, right? I'm that way. I go in there, I can't get out there for $500. You know,
Yeah.
walk in, there's a new TV, the DVD player, the 3-gallon jar of peanut butter, and oftentimes that's how people invest their money. They just look at things, and then they say that looks good, I'll buy that. And so what I've learned over the years is you got to step back, and the most important decision we make in investing is our asset allocation, and that's where we put our money: stocks, bonds, cash, real estate, commodities, or other options. And people don't start there; they start at the end by investing in a kind of a haphazard fashion, and they end up with a haphazard strategy. And so the advice I can give all listeners is to be very cognizant of understanding where your money should be first and what asset class, and then decide inside that class how to invest.
Yeah, because I remember I got a degree, CFS, Certified Fund Specialist, and Modern Portfolio Theory, and all this real fancy stuff. And it was interesting because they were talking about diversification. Diversification is not, I own Ford, GM, and Chrysler. You know, it's all the same segments. Yeah, that's right. And
Hey, Bruce, while we're talking about asset allocation, isn't it a little bit different for, for example, you're here in Marin County, and there's a lot of pretty wealthy families, but some of our listening audience, probably might not qualify for, some of the wealth management folks that you work with. Isn't, if you've got, millions and millions of dollars, in this low interest rate era, and you're in the positive, even if it's just a couple of percent, you're still doing okay for yourself. But what about people that are trying to figure out, my gosh, how am I going to live on my investment income in this era of low interest rates?
That's a great question, and it's interesting because some people have that attitude. Well, if I don't have much money, then I need a different strategy, and that may be the case. But oftentimes, you meet people that have accumulated a great deal of wealth, and they shouldn't be taking a whole lot of risk with their money. They need to protect it and preserve it and grow it slowly. And then on the other end, you have families that have accumulated a small amount of wealth, and guess what? They can't lose it. And it turns out that their risk tolerance is almost the same as somebody that's accumulated quite a bit of wealth because they really can't take a great deal of risk and grow it either. So it turns out that the strategies we're going to talk about today are quite applicable regardless of your financial condition.
Let me ask a follow-up question there. Talking about low interest rates, why are interest rates so low right now?
That's a great question. And why are they low? Partly because we know that the short-term interest rates in our country are controlled by the Federal Reserve, who has the ability to set the lending rates that banks borrow money at. And most rates are keyed off of those short-term rates. And the longer-term rates are driven by the marketplace, but the short-term rate happens to be kind of the starting point for all rates. And that's why we look at mortgage rates today at 3.5% for a 30-year fixed-rate mortgage, and we see the money market rate at 0. And that can be a real challenge, of course, but the Federal Reserve is holding down interest rates to do two things. One, to keep the economy recovering. We're in a very, very gradual and volatile recovery. It looks like things are going to get better. Employment's picking up, but it's unstable. So by making money virtually free to banks to borrow, it helps promote business activity.
Yeah, how much of it has to do with supply and demand?
Well, the overnight rate set by the Fed is not supply and demand. That's just set.
Yeah.
The demand is everything beyond that. And the reality of it is the dollar is still king in the world, and that's why the 10-year rate is at 2%, because people are dying to invest their money in our dollars when we look at the treasury rates.
So what does all that mean for the average person?
Well, that means if you're borrowing money, this is a great time to look at your mortgage and consider refinancing and take advantage of these historically low rates for refinancing. It's a little harder to qualify today, but for owners of homes that have income, it's a great opportunity to set their mortgage interest level at a record low. If you're trying to invest money, you've got some real challenges if you look at the traditional investment strategies. But luckily, there's all kinds of alternatives now that create significant income above that 1% we're seeing for a 12 or 24-month CD. And that's kind of where we try to place our clients.
Okay, you answered one of the questions I was going to ask you, so I'll ask the other one. How are you positioning your clients' investments to generate income?
Well, I think today we have to look at different strategies and combine them because we're just not sure what's going to happen next in the economy. I think we all know things are feeling better. They could get a lot worse and they could gradually improve. So we use a variety of strategies. We look at high-yield bonds, for instance, is a great marketplace right now for clients to put some of their money, because high-yield bonds are yielding close to 7% right now.
Would that be triple B bonds or what?
Well, they technically, I don't like to use the word junk, but yes, that would be bonds that are not investment grade rated.
Well, in theory, if the economy is going to get better, then those high-yield companies, let's just call them, should be a little bit safer.
They are safe.
the
And
future.
in fact, we know today that public companies have more cash in the banks than ever before in the history of the history. So we know public companies have a great deal of cash, and that gives you some comfort with the high yield companies. If you use an exchange traded fund, that we're quite fond of that sort of investment
Yeah, because the
option.
expenses are really low on those.
They're low, and you can get a diversified portfolio of high yield bonds and mitigate the risk of any one particular bond not doing well. So that's close to 7% yield and quite attractive.
Do you like munis at all?
Actually, muni bonds are interesting. There are some muni bond funds we're quite fond of. Nuveen, for instance, is a great family of funds, and we have some Nuveen funds that we use with our clients that are yielding 6% right now, and that's double tax-free. So that's an effective tax return of about 10%.
And would those be high-yield bond?
No, the
munis in
Nuveen,
those?
well, every Nuveen fund you have to look at, but these are all generally California municipal bonds.
Single A or?
They have a variety of ratings. Again, when you buy a fund of bonds, you get the diversification
Sure.
benefit, which we think is essential, as opposed to buying an individual municipal issue. Also, municipal bond funds, and people need to understand this, oftentimes use leverage.
Oh, interesting.
And most Nuveen funds use about 40% leverage. They borrow 40% of their money and buy more municipal bonds to ramp up your return. So there is a higher risk, but they're actually, if you look at the return profile, it's quite attractive.
But then how does that work? Because the interest being tax deductible isn't. If
It
you're,
is. No, it's still double tax-free. They're buying municipal bonds, so with the money, and that's the income they're distributing. So
I'm surprised they can borrow money cheaper than bonds, the municipal bonds are going for, because the rates on these things are
Yeah, but
fairly
how do
low.
you borrow? But they must be borrowing from municipalities, because you can't borrow from a bank and pay interest to a bank and get tax deduction for interest paid to a bank
Well, I
for
don't-
buying munis.
That's
You know what I mean?
Yeah.
It's too good a deal. But anyway,
the point is, if you look at municipal bonds, these funds are a great way to be diversified, and the way you can get that approximately 6% double tax-free return is by these funds taking on some leverage to kind of ramp up the return.
Okay, we are in the studio with Bruce Raabe, who's president of Collins and Company, and when we come back, we're going to get into some more asset allocation and other advice for the listeners. We're going to cut to our first commercial break, and the theme again is movies with gangs in them. All right, ready? Okay, what movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? Hint, the name of the movie is the main gang that tries to make its way back to its home base in Coney Island. The first three callers, in fact, I remember this movie was banned for a while because there was too much violence in looking at it. Okay, the first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? Excuse me. And hint, the name of the movie is the name of the main gang that tries to make its way to its home base in Coney Island. 888-912-1190. Make sure to include your name, address, email address, and speak slowly and spell it out for us, and we will be right back. Excellent.
Warriors,
That's
come out to
I
play.
was going to say that. So that's right. Warriors come out to play.
Wasn't that Sean Penn?
No.
That role, or was that
Michael Beck.
Oh, yeah, it was a
Guy
Sean
named
Penn
Michael
lookalike.
Beck.
Yeah, that's right. I was,
That's right.
always got it mixed up with those. Sean was in Fast Times at Ridgemont High. That's right.
Yeah, and he was also in Colors.
Was he?
Yeah, 'cause
Oh,
he's
Sean
great.
Penn.
Yes.
Yeah, because
Yeah,
he
he was.
did
Yes.
Pac-Man, and he
Yeah.
sprays the guy.
That's right.
Excuse me, if you remembered, I got to
Yeah.
unplug this just in case this.
The Tree of Life? No, that's Brad Pitt.
I didn't watch that.
Unplug her phone too.
Have a show.
Let's just drop his headset.
Okay.
So Bruce, you're
do
good.
your,
That's
good
radio, man.
Products include any real estate offerings or
Well, you know,
that
we,
type of thing?
Alternative
Not-
investments.
Alternative investments?
we, yes and no, usually not. I mean, I have some clients that want to be in hedge funds, and then we help them sort through those, or private equity. I try to avoid that for most clients only because it's a very long-term strategy. You put your money into a private equity person, and you wait 5-6 years and cross your fingers, and it can be quite financially successful, but in the meantime, you have no control.
So primarily you're sticking to
Liquid
exchange traded and, yeah.
You know, we have a fund that we invest in called Annaly Capital. They buy mortgages, right? And it yields 16% today, 15% right now.
Whoa, who's that?
Yeah, and so they're
Right.
buying residential mortgages
Yeah.
and leveraging that those, just like a bank does, you know, in a way to generate over 1% return. And so the nice thing is you can be in something that's kind of related to real estate, performing, you know, like it, the marketplace changes.
I always have to do
like
that
it,
to you.
Get out.
Because it's, it went public, they sold it as stock, shares of stock.
Well, you buy
Okay.
stock in a company that owns about $100 billion of mortgage.
Yes, I am.
Yes,
Yeah.
you're good.
So they buy mortgage-backed securities that are all.
You've been
by
frisked.
Fannie Mae and Freddie Mac.
Yeah.
Which are illiquid, but their stock is liquid.
Oh, no,
so-
those mortgage-backed securities are very liquid.
Are they?
Yeah, they
Okay.
trade, you know, it's one of the biggest markets in the world,
Yeah.
but you have the interest rate risk, of course, right? When interest
Yeah.
rates move, mortgages, you have mortgage-backed securities, they move up or down, right?
Yeah.
But we know, frankly, Bernanke's told us we're not touching short-term rates through 2014,
Yeah.
right?
Yeah.
They told us that, and
Yeah.
they better
You
stick
better
to
stick
that.
to it, yeah.
So we had somebody the other day from the Fed suggest otherwise, but
Yeah.
when you have that confidence that short-term rates are gonna be stuck, even though the long-term rates, they don't, you know, yield curve's already pretty steep, right? It goes from 0 to almost 3%. That's a pretty steep yield curve. You know, if it goes from 4% to 7%, that would also be, you know, steep. So normally, when it's this steep, because we're holding down the short-term rates, we probably won't see the long-term rates go much higher.
Are EFTs very similar to mutual funds in that, you know, a whole bunch of money gets popped in? And, I mean, that's the scary thing about bond funds is that, you know, interest rates are low, and then they pop in a whole bunch of money, they have to buy whatever's there, and then interest rates go
Yeah,
up.
so it depends, you know, most exchange-traded funds, what they are is a matching index. So there's one for the Dow Jones, or you can buy a bank index exchange-traded fund, or you can buy an index of high yield bonds or something like that. But generally what happens is they just create more shares. So you can buy and sell the shares from one another, right? But then there's participants in the banking industry that make it efficient, so there's never a premium or a discount, because they will just create more shares of that product, you know.
Well, mutual fund kind of.
Mutual fund, well, if you have what's called an open-end mutual fund,
Yeah.
where you send in the money, that's just more shares that day, and it always trades at NAV, right? Always.
Yeah.
But there are thousands of what they call closed-end funds
Yeah.
that trade on exchanges.
Yeah,
These
that's
Nuveen
closed,
funds are
Nuveen,
all
yeah.
closed-end. They own, like these Nuveen funds, they own
So much.
200 muni bonds, and that's it. There
Well,
they
what's the
are.
difference between an open-ended mutual fund and an EFT then?
Well, you have a manager. So a mutual fund has somebody that's managing it, and they may be buying and selling bonds in that, or stocks,
Yeah.
right? If you're a large cap stock fund manager, you can change it around, and they change it around all the time. And then they charge a fee for that because it's expensive.
So an EFT, is it almost like buying
ETF.
Vanguard's ETF?
It doesn't change. It's a static, typically a static list. It's not active, it's static. So if you buy the SPY, you get the 500 stocks that are in the S&P 500 index in exact proportion to what they are.
So no one really should ever buy like Vanguard's S&P.
Well, their S&P
Right.
index fund is the same thing. They just buy the index.
Yeah, I mean,
That's it.
because I mean, if you're.
But the
I can't
management
imagine
fee on
you-
that is tiny, right?
What?
The management fee is virtually zero because there's no manager, it's just a computer that sits there every day.
For an ETF.
Yeah, for an ETF.
Yeah.
But many mutual funds are the same thing. I mean,
Yeah.
Vanguard has a mutual fund
It's
that,
based.
that mimics the
Yeah.
S&P.
But it
most-
can never do it because you get money coming in, people say, I wanna sell. They have to keep a certain amount of cash on hand.
A little bit, yeah.
Yeah.
Now, if the market, if it goes down, of course, that helps, right?
Yeah.
But you're right, there's always a little bit of friction in any, there's no way to buy and sell or own anything without paying a little bit of a you gotta pay for the,
Pay for the stiff.
well, I mean, somebody has to do it, right?
Yeah.
But
Vig.
but that usually doesn't
Where's
make.
my Vig?
Sorry.
That's not what makes a difference at the end of the day, right? You know, it's not your management fees, it's where did you put the money and what happened to it,
Yeah.
you know? Or it's not the mutual fund fees.
I mean,
per se.
would you ever recommend someone to buy a Vanguard, I'm just picking Vanguard because they have low expenses.
Yeah.
Vanguard S&P versus the S&P
It
ETF?
doesn't matter, they're the same,
Okay.
virtually the same,
Virtually the same,
management
okay.
fees the same, but there's nothing, they're identical. Now, that's a very generic ETF, so, most mutual funds try to have a value-added strategy, right? We got this smart guy.
They try.
Right, so that's what they promote, right? Five-star rating.
underscore.
Okay,
Try,
so,
right.
in this segment then,
I've got a couple more ideas to talk about.
Yeah.
We talked about income, right? So
We did, yeah.
But I've got some more strategies we haven't talked about. We should talk about preferred stocks a little bit.
Yes.
Yeah, absolutely.
We
Yeah,
could
let's
talk about floating rate. I've got one fund that PIMCO has that is a floating rate fund, so that
Okay,
interest rates
good.
go up.
I'll say what other strategies you can
Yeah,
share with
yeah.
us.
Yeah,
Okay,
Got it.
sounds good.
Sounds good.
Then I could sit back and listen to you guys.
Oh, and participate.
You're giving a lot of information, which is good. I like
Yeah.
Now, I have a question for you.
Yes.
Is there any disclosure you need? We're not telling people to buy these things per se, right? So I want to be careful that people don't construe this as
No,
investment
in the beginning of the show.
Okay.
There is a disclaimer.
Okay, perfect,
that we-
yeah.
Yeah, it's canned.
Yeah, that's perfect.
It says something like, Bruce guarantees these investments.
Right, call him, and here's his address, here's his cell phone number, and
Yeah.
his car is parked right here, so.
Yeah, exactly. Yeah, no, it's always
Yeah.
we're not getting advice and consult.
Yeah, consult an expert.
Consult Warren Buffett if you need it.
Yeah.
That's right. He says buy real estate, by the way.
Buy a couple
Yeah.
100,000 single-family houses is
If
what
you
he said.
can, that's
Yeah.
right.
Yeah.
First person
Yeah.
to hit 100 grand wins.
Did
Yeah.
he
100,000
actually say?
He said that on
wins.
CNBC,
Yeah, he said
yeah.
If you can't buy 100,000 homes.
I was going to mention that, actually.
Well, yeah, he can buy it.
He's not always right.
There you go.
I think he's
But I
right
like
this
his
time.
track record.
I think he's right this time.
Yeah, me
Okay,
too.
you guys ready?
Yep.
Maybe
Ready,
for
go.
5 seconds, okay. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Brian Burke, and we're in the studio here with Bruce Raabe. And we asked this first trivia question when we went to commercial break. What movie in 1979 featured gangs such as the Riffs, the Orphans, and a gang dressed like the Yankees named the Furies? And the hint was the main gang tried to get back to Coney Island, its base. Mark, I know you know the answer to this one.
Oh yeah, I remember that movie because you're right. There were all kinds of fights in the theaters. Even when we were watching it here in Marin County, it was warriors.
Yeah, that's right. Remember that one guy who said, "Warriors come out to play." And he kind of takes the bottles.
That's creepy,
That's a great movie.
I gotta say I missed that one, but.
Missed that one. Okay, well, go rent it.
I
It's
didn't-
actually kind of
Netflix,
fun.
it's great.
Yeah, it's
That's
a fun.
classic.
Okay, Bruce, what other not allocation? What other advice you want to share with our listeners?
Well, I think we were talking earlier, Edward, about where do we go to find some income, and it's a real challenge. But there are some places we don't just have to give up on the strategy and put our money in a money market account if we're willing to accept some level of risk. So, the stock market's coming back. We've seen that. Looks like maybe it's got some legs to it. I can't tell you for sure, but you can look at preferred stocks, which pay very high dividends, and also these dividends are preferred. And so that sort of investment gives you the best of both worlds. The preferred stocks are yielding at about 6% dividend right now, and also the preferred stocks themselves tend to track the stock market. So if the market gets better, then you're going to benefit in that way. Now, it's not risk-free, of course, but it's a way to kind of split the difference between buying some bonds that may have very low returns or putting your money in the stock market that might have more volatility. So that's something we like. You could also consider, there's a couple money managers out there that are very good at managing bond portfolios, PIMCO being the largest in the world. They have a couple of funds that we think are attractive. One, their PIMCO Income Strategy 2 is a strategy that invests in floating rate debt. So if you're worried about interest rates going up, and we all think someday that's going to happen, we haven't seen it, but maybe someday that will, a strategy that both invests in floating rate debt will be able to benefit from rising rates because the debt they own will step up. And so you have that, you avoid the risk
of losing principal. if interest
losing
rates
principal,
go up.
exactly.
Yeah.
So that might be something you want to add to other strategies. I think we've heard a lot of negative news about mortgages and how volatile they are and home foreclosures. But there's some great funds that invest in mortgages that are guaranteed by Freddie Mac and Fannie Mae. And these mortgage REITs, we call them, trade on the New York Stock Exchange or over the counter. They're yielding between 14 and 17% right now, which is incredible. Incredible returns over 1% per month.
Why are they yielding so high?
Well, their model is much like a bank. They borrow money very cheaply at very short-term rates, and then they buy mortgages. And then they borrow more money, and they buy more mortgages. And the mortgages are yielding about 3.5%, and they're borrowing money close to 1%. So they leverage that up about 6 times. Now, banks were doing that leverage 20 times, but say 6 or 7 times, and they get to those very high returns. So this is a fund you have to watch carefully. If short-term rates go up, obviously, that will reduce that return. Fortunately, we've had some guidance from the Federal Reserve that they're going to keep short-term rates pretty much at 0 through 2014.
And that is traded on the exchange, on the New York Stock Exchange?
Well, one example, the largest is a company called Annaly Capital, and that is a security we own. I'm not saying it's right for everybody, but it has a very high return. Today it's about 60%.
How much volatility has there been on there?
Very little. In fact, the 5-year return on that stock right through the disaster of 2008, the 5-year return is 15% per year.
That's
so
amazing.
That's not so bad. So and it's yielding 15% today. So
and it's liquid.
And it's liquid. You don't like it, you hit the button, you get out of it. So that's an interesting strategy. I think municipal bonds, we talked about those, is something people should consider. And finally, corporate bonds are not the end of the world. If you buy a corporate bond fund, a high yield fund, you can still get a close to 3% return on a diversified fund of corporate bonds. So I think the real strategy is to take all of these different strategies and blend them together. By taking 6 or 7 strategies, you've kind of protected yourself, and you can net out with an average return of over 5%.
And you've got your diversification.
Absolutely.
Well, you were talking about the interest rates and where they're at and then the volatility. So what do you think will make interest rates rise, and when do you think that might happen?
Well, that's a great question. And how we know, it's hard to forecast when the economy is going to get better, but typically the Federal Reserve tries to keep inflation in check, and at the same time, they don't want to destroy the economy. And so since we've had some guidance, unlike we've ever had before, that they're going to keep the short-term rates low for a couple of years now, we have some comfort that we can step into some of these investments that have potential risk if the rates go higher. If we see the economy really accelerate, we're going to see the Fed become more defensive, and they will raise the short-term rates to slow the economy down. And that's what they do. I don't see that happening this year, probably not next year, but that's the kind of thing you have to monitor. If we see a massive growth in our economy beyond the 2% that's forecast for this year, which is kind of a very slow recovery, then you get more defensive. But until that happens, frankly, I think we can be a little bit, take a little more risk in our fixed income strategies to pick up the income that's well above, the alternatives of having your money at the bank or a CD.
Now, Bruce, your company, how do you guys make your money?
Well, we are a fee-based investment manager, so we charge a management fee based on the size of the accounts that we're working with in our client
Can you
relationship.
share that with us?
Our fee?
Yeah.
It depends on the size of the account, but it can range from 1.25% per year down to less than 0.5% per year, depending on the size of the relationship.
Any other questions, guys? Any other allocation?
Asset allocation, our
Yep.
favorite topic.
Great.
What do you think about REITs, Bruce?
Well, we talked a little bit about the mortgage REITs, and I think that's a great way to participate in the real estate market by owning mortgage-backed securities instead of owning real estate directly. We've actually seen the real estate market recover quite a bit. Commercial real estate, when you look at the real estate investment trusts that people can invest in, those have had pretty nice recovery. There's a lot of risk in commercial real estate that I'm not sure is appropriate for most clients, because the income now that comes off of these REITs maybe is not as attractive as it once was. An area that we think is quite attractive as an alternative is the master limited partnership sector of our economy, which is driven by oil and natural gas discovery and distribution. I know we've all heard about the massive increase in natural gas that we've discovered in our country through new processes of getting the gas out of the ground. Nearly doubled or almost tripled the amount of natural gas we thought we had, and we're seeing a huge boom in the pipeline companies that distribute the natural gas, not the companies that own the gas, but the companies moving it around. And
Yeah, how come
breaking
the
up
price hasn't gone down?
Yeah,
Well,
right.
natural gas prices actually are at a 10-year low. It's the gasoline, which is driven by oil. So we're seeing natural gas so cheap, we're going to see it as an alternative source. And there are ways to invest in master limited partnerships that are yielding about 6 or 7%, which are
We
pretty.
just gotta figure out how to
attractive.
put natural gas in the gas tank.
Right.
Right.
So Bruce, how concerned are you about, international events like what's going on in Greece right now with?
Big issue. In fact, we saw last year, we saw the corporate earnings of the S&P 500 companies growing at about 15%. And then at the same time, we saw the market drop 20% between April and September. So, it's a global marketplace, and Europe is a major trading partner of ours and China's. And so when we see major problems, even in a small country like Greece, it affects our financial market. So we have to have a global perspective, even if we're investing in U.S. companies.
Do you wanna predict the Dow by the end of the year?
Yes, we do predict the Dow. We have a contest every year, and we never get it right. But
Well, just give us your personal opinion.
Well, I think
No guarantees.
I think my forecast actually at the beginning of the year was about a 12% return for the Dow Jones this year. We're up about 6.5% today. So, I think this could be a great year for stocks in general. Earnings are slowing down. They still will be the highest they've ever been for the S&P 500 companies. And we know that the Dow peaked out coincidentally on my birthday, October 9th in 2007, at about 14,160. So, I think it's possible we can get back to those levels, assuming we don't have one of these unexpected black swan events that seems to appear every so often.
And relating that back to interest rates, doesn't it seem that as the stocks do rise and people gain more confidence in equities, they pull their money out of bonds, and that causes the interest rates to rise for the long-term rates?
It's possible. It's just, that's true. At the same time, that's why you have a diversified strategy of having, an allocation that includes stocks and bonds. And depending on your risk tolerance, maybe that's 60% equities and 30% fixed income and some commodities. But you don't just go all in one or the other. You need to balance those assets out so you benefit in any scenario.
All right, Bruce Raabe from Collins and Company, thank you so much. Stick with us, because we're gonna talk real estate. I'm sure you're gonna have some insight in that
Some
too.
disagreements, maybe.
Exactly. Yeah. That's okay. All right, we're gonna cut to the second commercial break, and here's our second trivia question. Again, it's gangs in movies. Name this 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube that takes place in South Central. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Name the 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube, and takes place in South Central LA. Call 888-912-1190. Make sure to include your name, address, email address, and remember to speak slowly and spell it out for us, and we'll be right back.
Yeah.
Very
That's
good.
it.
Nice.
No, it's
I
not.
couldn't remember that.
I
That's
cheated.
good.
I cheated.
Oh, you lied.
Really?
Boo, boo, yes.
He's
It's
over
called
here.
using technology to your advantage.
Yeah,
Quick
that's
with
right.
the iPad, look at that.
That's too funny.
You
That's
wanna watch the trailer? No.
Yeah, right.
It's a good movie.
Yeah, that was a good movie, yeah.
You can slide the headsets down if you like.
Oh, yeah, so to make people.
I like the
Thank
the
you.
runway picture you have on the front page.
Oh, my daughter took that. Yeah.
that right?
That's, I have a little airplane that's landing in Little River up in Mendocino County.
Yep. Yep.
Runway
That's,
29?
that's
Yeah.
a pretty long runway for
It is.
a general
See it, Bruce?
aviation runway.
What's that?
Let's let the audience see it.
Oh,
this
are we on the
audience.
video? Okay.
Okay, here I
I
am.
don't see that.
Yeah.
What is
No,
it?
we fly up there a lot. I've got a house up on the coast there.
It's a little bit foggy.
Just a little, yeah. It's
Just a
clear
little
enough
bit.
to land, but
Yep, yep.
they get fogged all the time.
Yeah, that's interesting. What kind of plane do you have?
It's a Cirrus. It's
Oh.
a little plastic airplane.
I have one myself.
Oh, you do have a Cirrus?
Yeah.
Everyone-
Yeah.
Everyone's got airplanes except for him and me.
Yeah. Well, we can fix that.
Yeah, that's,
Yeah.
Not that hard. Yeah, I have my plane's in Sanderville at the Sanderville Airport.
Yeah, Smith Ranch.
Yeah.
Oh, very cool.
Yeah.
Yeah. Oh, it's.
I've been in an airplane once.
Have you?
Yeah, I've seen one. Yeah, I'm
There
a
are
actually
smaller
been in a
plane
couple.
ones, yeah.
Yeah.
Actually, my
Tom
daughter
and
was flying
friends,
this plane.
so-
I'm kind of afraid of the things.
Oh, great.
Just had autopilot.
Yeah, that's
I
right.
remember
That's
we
the nice
went
thing
to,
about a Cirrus.
Direct in and enter.
when we went to Phoenix.
Yeah, exactly.
We went to Phoenix and then we were gonna go do the Grand Canyon, and rather than doing all the drive.
Yeah.
It was, we drove to a place that took us to a van to go into a small airplane.
Yeah.
That took us in a little helicopter to give us a little boat down the river.
Nice.
I mean, every kind
Yeah.
of possible, I just wasn't on a space shuttle.
Yeah.
That's the only mode of
And
transportation
I didn't
you
walk.
take.
Yeah.
I go, take me everywhere.
All right.
That is too funny.
So Santa Rosa, that's a nice airport.
It is,
Yeah.
yeah, it's great. We got an ILS and, we don't have to worry too much about,
The weather big, yeah, lots of big runways, yeah.
yeah, it's got a nice big runway. It's got
Oh,
an
yes,
ILS.
I'm sorry.
Is your office up there?
Makeup, please.
Yeah, I'm in San
Makeup.
Okay.
It's too hot in here.
Yep, so it's 15-minute ride.
things
up
I
the-
have to go
up the
through.
road.
Oh, yes.
And I have to rent
Yeah.
this hat
I
from
used
my
to be in
friend here.
Knoxville.
That's right.
That's
I
true.
rent it for 1 hour.
Oh, right.
You know, if I
Traffic
take
on
off
the
my shoes and socks
I
when
learned
you
to fly
massage my
at
toes
night.
too.
Yeah,
did you?
We don't have smell on the camera, so it's okay.
I'm sorry.
But yes, I do.
This guy's name was Stephen Deal. What was that little flight school that went out of business?
Marine Air Services?
No.
Might have been, I might be dating myself with
Yeah,
that.
it's like in the.
You can't date yourself in your 40s.
Well,
Yeah, no,
I learned to fly in 1986.
Okay, yeah, good for you.
So, yeah.
You were 16 or what?
Yeah, I was. So when you
Wow.
when you date yourself and start talking about
Yeah.
businesses where we are at the airport that haven't been there in 20 years, you're
I
dating
know,
yourself.
You know, it's like when I flew in a World War I biplane. Scary.
Oh,
Yeah.
No parachute. Just I go, where's my seatbelt? And literally, it's like it was one of those little tiny clip things. You just kind of push down and clip on.
I fly helicopters too, and flying those without a door.
Yeah,
So
that's
you're in
that's
this,
cool.
and there's about as much room as there is between here, Bruce and I.
Oh, yeah.
And there's no door.
Well, okay, but now you have a seatbelt.
Seatbelt,
though.
you
got a
have
seatbelt.
Okay, question for you on that, because someone told me, and I wanted to verify this with you. If you run out of gas, as long as you're still up,
No.
is it true you won't crash
No.
because the wind
No.
will take the propeller still?
Yeah, you can get down.
No.
You have
Yes, no,
Never happens.
you have about 1.3 seconds in an R22 before you have a rotor blade stall. And if the rotor blades stall, it's unrecoverable. But
No, not the stalling of the no. I was told that as long as the blades are
as
still
long as
spinning,
the blades are still spinning,
you
you can get
you won't
down.
come down hard enough. Yeah.
You will come down. Yeah,
You'll come down.
You'll come
That's
down.
right.
You'll come down quickly. But see, that's one of the things we
But
do in
you're
helicopter
gonna
training.
come
We
down.
spend a lot of time doing the engine out practice, and you cut the power and you lower the collective, and you've got just enough kinetic energy left in your rotor system so that right before you touch down, about 8 feet off the ground, you pull up on the collective, which increases the rotor pitch. It slows the rotors down, but it also slows down the rate of descent. There's just enough power
So
left in there
so
to cushion you
roughly,
down.
yeah. How
You'll,
hard? will
you'll
you
descend about 1,500, 2,500 feet a minute, somewhere in there. Then right before you get to the ground, you'll just touch it down. Spoken like a true airplane pilot.
Yeah, miracles happen, but not often.
Well, that was like the last one where I said, the ad in the paper, right? Parachute used only once.
Oh,
Small
right.
stain,
Yeah,
never
exactly.
opened.
Yeah, see, the Cirrus has a built-in parachute, but you can only use that one once as well.
That's all right, and for the whole airplane.
Yeah, for the
Yeah.
whole airplane, yeah.
It is a big I mean,
Big parachute.
So that
Yeah.
the whole airplane's
Funny.
covered by big.
We pull a handle in the ceiling, it'll lower the whole airplane and everybody get it to the ground.
And that will work.
Yeah.
Yeah.
Yeah, it will
That's
work.
a big parachute.
It's a big parachute, yeah. Propelled by a rocket motor.
Yep.
It rockets right through the skin of the tail of the airplane.
Well, yeah, it would have to, I would think.
Yeah.
But
Yeah.
to the tails, I mean, you guys are all facing down.
No, it has straps and it balances it all out.
All right.
Just
I
bunch
had
of-
no
okay.
idea. Maybe I will fly with you one day.
No, yeah, you should.
I just thought I would crash
Sure,
and
that
die.
parachute.
Ah, no, forget about it.
No, it's-
Haven't crashed and died yet.
Oh, you know what, we forgot to, when we come back, first thing I'll ask is how do people get a hold of you if they have
Oh, sure.
millions
Sure.
of dollars?
Sure.
Go to
What
the
is your
Smith Ranch
minimum
Airport.
size?
What's that?
What's your minimum size?
2 million. That's, we don't have many.
Gosh, I'm
yeah.
about 1,980,000 short.
You're close.
Yeah.
You're close. You and me both.
Yeah. Okay.
All right.
Okay, ready?
Segment 3.
Segment. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Humph and Brian Burke. And we have been in the studio with Bruce Raabe from Collins and Company. Bruce, we've got to have the listening audience find out how to get a hold of you if they have money to invest.
Edward, that's a great question. Well, I made it easy. I created a little website. It's called havecoffeewithbruce.com.
Are you serious?
That's it. Yeah, havecoffeewithbruce.com. And that's a nice little introduction to what we do and our services, and that's a great starting point to decide if there's
I love
any
that.
reason for us to
I
get
do
together.
like that. That's pretty cool.
Have
It
a cup
is.
of coffee.
And
That's
all of
the
a
first
sudden, there's
step.
going to be a run on .coms for have coffee with names, right?
Yeah, but he's going to have to buy a lot. We have a lot of listeners. He's going to have
That's
to
a
buy
lot
a
of
lot of
coffee.
coffee.
Well, it's a great place to start. There's some videos there and also some information about the types of service we provide. So
Okay.
if your listeners are interested, I'd be more than happy to check in with them.
Okay, terrific. Okay, when we get to the second commercial break, we asked this trivia question. Name the 1991 movie featuring Cuba Gooding Jr., Lawrence Fishburne, and Ice Cube that takes place in South Central. Because remember, it's gangs in the movies. And the name
There's
of...
gangs in South Central? Oh.
Just a couple. Bruce, I think you knew the answer after you cheated, but go ahead.
No, I didn't know the answer. Somebody else.
Who knew the answer to this one?
I didn't know the answer to that one.
I didn't.
Go ahead.
It's Boys in the Hood.
Boys in the Hood with a Z.
Alright.
That's right.
I
Okay.
looked it up on this iPad in like
well,
2
technology.
seconds.
That's okay. Oh, by the way, you know what? I forgot to mention this too, but it's only good for this week. So Lighthouse, actually, you know what? It's not going to work this week, so forget that. Forget
Come
what I
back
just
next
forget-
week.
Yeah, come back next week. Okay, we are going to get right into email time. Brian, here is one for you we received. If I invest with Praxis Capital, am I investing in a fund or in a specific property? That's a good question.
Yeah, that is a really good question. And for new listeners out there that don't know what it is I do for a living, I'm the managing director of Praxis Capital. We're a real estate private equity firm based in Northern California, and we primarily we manage several alternative investment funds for capturing the unique situation in the real estate market that's going on right now. And we have funds that invest in multifamily property and in single-family property as rentals. And incidentally, there was a comment earlier this month from Warren Buffett. He went on CNBC and said that he would buy a few 100,000 single-family homes if he could figure out how to structure the management. So,
And he could probably do that, too.
And he probably
Yeah.
could. And you know,
Indeed.
we started saying that exact same thing about 6 months ago, and we've been buying single-family homes as rentals ever since. And
How many
primarily-
hundreds of thousands do you have?
We're on our way,
You're on our
actually.
way.
Our inventory is climbing rapidly. So most of the time when people invest with our company, they're investing in a fund. The fund owns the real estate, and they own units in the limited partnership or LLC. We do have some programs where investors can participate in a particular property. It's a little bit of a different structure. So basically the answer to the question is it depends, and it could go either way.
Okay, so you have people have choices.
We have choices.
Brian, I've got a question. Tell me a little bit about your geographic concentration. Are you in the Santa Rosa, Sonoma marketplace? Are you all over California? What's your footprint?
Yeah, our footprint's actually pretty large. We started we have an office in Santa Rosa, and I've been based there for 20 years. We've been operating in that marketplace, and then a number of years ago we expanded our operations. But as a result of the wave of foreclosures that's come upon us over the last couple of years, we've grown exponentially, and now we're basically from the coast to the foothills and everything in between. So we're from Sonoma County all the way to Placer and El Dorado County and everything in between those, and down the Central Valley, and we've just recently done an expansion into Southern California as well.
And do you only go to the courthouse steps?
75% of the properties that we purchase at the courthouse steps at auction, and 25% of the properties we purchase through banks, short sales, probate, and so on. But one of the key components that we like about this business, especially for rental property, is buying homes that are already occupied with a tenant or an owner who wants to stay in the house, and if they're still there when we buy it at auction, we can oftentimes work out an arrangement for them to stay and remain as renters, which we really like that strategy. Buying at auction allows us to employ that strategy. Buying REO, usually the banks have evicted whoever's there.
Well, yeah, especially if there are people who are living there are probably taking care of the place if they want to continue to live there.
Yeah, that's right, yeah.
Okay, Mark, we received an email from you, and here it is. Do you always make interest-only loans, or are there loans that you do that have amortization in them?
Oh, okay. And for our new listeners, I'm Mark Hanf, president of Pacific Private Money, and we're real estate lenders for real estate investors. And those of you who buy real estate, you probably know that the banks generally aren't making loans to real estate investors these days. They haven't been since the real estate crash in general. And so the private money lending industry has filled that niche. And in fact, it's one of the fastest growing businesses in the financial sector today is private money lending. And so we make loans to real estate investors to buy real estate in California, to buy fix and flip, or to collect properties for rental income, like Brian was just talking about. And one of the features of the loans that many private lenders make, like Pacific, is that we generally make loans where the payments are interest only, and real estate investors tend to like that because it conserves their cash flow. So when you borrow $100,000 to, say, buy a $150,000 home, which is a pretty common ratio that we use, a 65% purchase money loan is generally the maximum that private lenders will go up to. If you're intending to fix and flip that house, it limits the carrying cost to interest only. So we generally do not make amortized payment loans. Again, we're talking generally short-term loans, so real estate investors for the most part, especially if you're fixing and flipping, you're not looking for a long-term loan. Maybe you're going to have that loan out for 6 months. Although people collecting real estate for rental income, oftentimes they would like to see maybe a 5-year loan, but the way the marketplace is right now, because of volatility, many of our private lenders who are the source of our funds, generally their comfort level is generally 2 years to 3 years for a loan. Again, with interest-only payments, you can oftentimes buy property in many, many markets in the Bay Area where you could still get positive cash flow, positive net cash flow from rental income using a so-called hard money or private money loan where you might be paying interest rates of, say, 10%. So
I can attest to that. We're doing it.
Yeah.
Yeah, but the thing that's kind of neat is that, I've got 2 co-hosts here who are in real estate, but they're not competing.
Right.
Sounds like they should be working together.
Yeah,
that's
exactly.
right.
Yeah.
Yeah, that's exactly it. So investors with Brian are investing in an equity opportunity, and some of the yields that they've been able to achieve are fabulous, whereas my investors are generally investing in a financial instrument. It's a debt instrument. It's called trustee investing, and they're usually solving for fixed returns of, say, 8, 9, and maybe even 10% in certain situations.
Very
Yeah,
good.
exactly.
Sounds very attractive.
Okay, hey guys, we're going to cut to our third and final trivia question. When we come back, we've got some cool economic stuff to talk about.
Absolutely.
All right, here is our third and final trivia question, and again, the theme is gangs in the movies. All right, what were the names of the 2 main gangs in West Side Story? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What were the names of the 2 main gangs in West Side Story? Make sure to include your name, address, and email address, and remember to speak slowly, and please spell out your information for us, and we will be right back.
Crips and the Bloods.
I was gonna say the Bloods and the Crips.
Daisies
Well,
and
you
the
got it back.
Sunflowers.
Yeah, it's classic.
Is it the Girl Scouts and the Boy Scouts? I was thinking cool in the
I'm
game.
Okay,
barely
okay, you
old
guys-
enough to remember that.
You guys,
one.
okay, seriously,
it's
you
cool.
gotta say all of that on the radio. Okay, that was great. See how much fun we have?
Yeah.
We shouldn't even be allowed to have this much fun.
That's
It's
true.
so much fun.
That's true.
That's right.
Kramer, you're having fun, aren't you?
I am having fun.
And I don't even need
We're
makeup
supposed to be
now.
serious when
No.
we're on the radio.
Yes, of course.
And by
This
the
is a
way,
serious
this
business
beard
show.
is going to be gone in about an hour.
That's really, I'm sorry to hear that the
Yeah,
the
pretty
show
frustrating.
must not go on.
Yeah.
Very frustrating.
Somebody.
I'm going to play. I usually don't
Oh.
have this. And I'm
I don't
playing.
either,
I'm
but
supposed to be
I'm
playing Judas.
Oh.
And
That's for him.
don't worry, it's not my normal personality to be Judas, but
So he
I'm
says.
usually a really nice guy.
That's right, so
Um,
you say.
Yeah, but I had my part down and everything, and figured it's the only time I can like be a bad guy and be okay with it. But I was teasing my pastor about it. I said, "Yeah, I said I'm going to do such a good job that you're going to kick me out of church." We don't want this guy here. Is this?
In fact, he went through his lines last week with.
Yeah, no, that wasn't even close to what it should be.
Oh,
Not even close.
Okay, well, we're gonna air that anyway,
Okay.
if we need to filler.
Create some filler. Okay, guys, what do you want to talk about the last?
Well, Mark's got an article, and I have one, the same one as well, about the Core Logic report about negative equity in Q4. And so, Mark, if you want to lead off with that one, I can chime in if I have anything to comment about. But the one that I had, in addition to that, was about Fannie Mae REO inventory declining. They just came out with a new report, and there's some interesting comments in there about
Well, the
that.
way I like to couch this stuff always is that, these headlines tend to be, if it bleeds, it leads type of
Mhm,
information. And,
mhm.
and I don't look at a lot of these reports as being bad news. It's just news, and what's the silver lining? And
Yeah.
again, I think for real estate
Yeah.
investors, it's just more, more assurity that look, there's no rush to go out and make your millions in real estate, right now. I think we're going to have a market like we have now for the next 5 years, and I think that's really what
Real
it's
estate
telling us.
market, yeah.
Real estate, that is. I think, in other words, I think we're going to have a steady stream of buying opportunities as a result of the continual resetting of equities. More homes are going to enter the foreclosure phase, but it is slowing down. That part is actually slowing down. It's just because there's such a, we had that dip in pricing in the fourth quarter, which
Yeah.
I know for a fact that in markets that I'm lending in, the resale prices went down considerably in some markets in the fourth quarter. And of course that means that more and more people who are living in a home they bought in the last 10 years are very likely to go down even further. But if they're not going to sell, that doesn't really mean a whole lot. So.
Okay, we got 11 minutes and 30 seconds.
Let's go.
This is
Got
a
it.
good one. Okay, so everyone remembered your answers that you were going to give? Because that'll be good. You guys ready?
Yep.
Bravo. Here we go. Stop bringing your email.
I know, right?
Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Humph and Brian Burke. And when we cut to the third and final commercial break, we asked this trivia question. What were the names of the two main gangs in West Side Story? Now, the audience didn't hear all this, so we're going to go down the list because everyone had an answer. Mark.
The Bloods and the Crips.
The Bloods and the Crips, no.
I thought the Girl Scouts and the Boy Scouts.
The Girl Scouts and the Boy Scouts, no.
The Crips and the Bloods.
Oh, we already
Well,
heard
he
that
had
one.
it, he had it, he had it
No, no,
reversed
no.
though, so
Yes.
I thought it was
No.
Cool in the Gang a Gang.
Cool and gang.
I don't
Okay,
know.
I know our
I guess
audience
none of
knows
us
this
know.
answer because all of us were too young. The Jets and the Sharks.
What? That sounds
What?
like teams.
That's
Jets
like
and
hockey
Sharks.
teams.
That's
isn't it?
hockey
that's
teams. Yes,
teams.
it was the hockey gangs. That's right. Okay, Mark, you came across a very interesting article.
Well, yes, CoreLogic this past week released a report that, and we've talked about this before, it is the increase in homes in the United States that have negative equity or near negative equity. So
Upside down.
Yeah, upside down. And so it's a report for basically the fourth quarter, and it's essentially saying that in the United States, 23% of all properties with a mortgage were in negative equity in the fourth quarter, and that's up about 4% from a year ago.
That didn't mean that everybody stopped paying on their mortgage.
No, that does nothing. No, that's nothing to do at all. It's just the value of their mortgages, the underlying mortgages, whether it's a first or first and a second, is higher than the market value, and you would expect that to happen. So the report's kind of obvious, since we've been talking in previous shows so far this year, how the fourth quarter, a lot of markets, and particularly here in the Bay Area, I know markets that we've been lending in the Bay Area have gone down. Oakland saw some substantial price increases in the fourth quarter. In fact, a lot of people pulled their fix and flip properties off the market in the fourth quarter because it was just ridiculous how low the price offerings were going, and properties just weren't moving again in a lot of markets.
So they turn them into rentals?
Well,
Or they
some
just
of
kept them vacant?
They just kept them vacant or turn them into rentals. But just to kind of continue on, they also talk about an additional 2.5 million borrowers have less than 5% equity. They refer to that as near negative equity. So again, in terms of what that means, in California, for us in California, that number is actually a little bit higher. California, we're at 30% of all homes with mortgages are underwater.
Does that mean that they're expecting more foreclosures? Like those people will eventually stop paying?
Well, what it indicates is, well, it's a couple of things. First of all, I tend to believe that we're at or near the bottom, first of all, of the price decreases. I don't expect much more price decreases in 2012. So I think this number is a number that might be the high water mark for California if we're talking 30%. What that means for the future is that, if the people continue to pay those mortgages underwater or otherwise, in years to come when prices recover, this isn't necessarily going to get foreclosure. But what it does mean is there is pressure on the foreclosure market, because if you're substantially underwater, and some people are 100,000 or more underwater in their mortgage, those people often tend to choose to do a strategic foreclosure and walk away. So I still think that there's an awful lot of.
But you wonder if the banks at that point would just reduce the principal.
Yeah, they don't want to do it. They don't want to do it.
They'd rather just go through the
Well,
foreclosure.
now you're in this moral, gray area, because now the people that are paying on their loans are going to say, well, where's my principal reduction? So then you run into some problems there. You don't want everybody calling you up asking for a principal reduction. But Mark, one thing I noticed about this report, I don't know if you saw this, but California got kicked out of the top 5.
Right.
California's been in the top 5 of negative equity states since the foreclosure crisis began, and we got booted. So now it was, the order is Arizona, followed by Florida, Michigan, and Georgia
Well,
has
now, wait a minute.
now made it.
Did we get better? Or did the other ones just got
I think
worse?
the others got worse.
Okay.
Is what it
I
really
think you
was.
forgot Nevada. Nevada's actually
Nevada's
number
number
one.
one, yeah.
60%
Yeah,
of the
60%.
mortgages are underwater.
And probably 80% of those
Are
are
in
Las
Vegas. Yeah, they are. Vegas really got nailed. And
So that's
for
part
Arizona,
of the shadow
it's
inventory
Phoenix.
that people talk about, is that is not only is it properties that are in some stage of foreclosure now, but it's the properties that are likely to be in foreclosure in the coming months and years, because they're so far underwater that at some point those homeowners may decide, you know what, it's just not worth it, we're just going to give it back to the bank. And so, kind of what that means, I think, for real estate investors, and this is where I always see the silver lining, is that, I think we're in for a good 3 to 5 year run of real estate being on sale in California, with opportunities to acquire real estate for rental income, as well as acquire real estate that's been foreclosed, or at the auction, if you got cash you could buy at the auction, to buy real estate that you could acquire at extremely good prices that maybe have upside for equity. A lot of homes coming on the market that my investor clients see, haven't been remodeled in a long time. Maybe the people refinanced the heck out of that property and then gave it back to the bank, and it was built in the 50s or 60s.
And the refi money didn't go into the
And
house
it didn't
either.
go into the house, no. And
it got towed away from the house.
But
with the
those
boats.
homes are great opportunities to fix and flip, and that's really what is the beauty, kind of the unintended consequence of all of this, is that you know, hundreds and thousands of foreclosed homes are now being nicely remodeled by real estate investors using private money,
Yeah, that's
not
exactly
bank
what we're
money,
doing.
and returning that to the market or to either via rentals or for new home
Well, you know, it
buyers.
is with the banks, they get gun shy and they totally do the pendulum the other way.
Yeah, they do. It always swings too far. You know, right along that line, Mark, talking about houses that have already gone through foreclosure and are REO now, Fannie Mae came out with a report that their REO inventory declined 27% in 2011. Now, obviously, we know about, and we've talked about on the show before, the slowdown in foreclosures that we've had over the past 16 or 18 months as a result of the robo-signing scandal that came about in October of 2010. And, you know, that the slowing of REO acquisitions due to the fact that they're slowing down their foreclosure pipeline, they didn't slow down on their dispositions of REO. So they were selling the houses at about the same pace as they always had been, but
Right.
they hadn't been accumulating the houses through the back door. So, you know, there's been a lot of talk about this next wave of foreclosures that's going to come and how it's going to flood the market and all these things. And, you know,
But these banks filing NODs
Well,
now.
they are. They're filing NODs, and I think the wave of foreclosures is going to happen. We're going to see an increase in activity at the auction level especially, but if the houses that go into REO, even if they just maintain their current pace of sales, but REOs at the auction escalate, the REO inventory isn't likely to grow because currently they're selling them faster than they're acquiring them. So if they start acquiring them faster, the two could be in equilibrium. So
Yeah,
I don't think there's going to be a wave of REO. I think there's going to be an increase in auction activity, but not
Well,
necessarily
I can
a wave of
imagine
REO.
the banks, you know, I don't know, you'd have to kind of do the analysis on this, but I can imagine the banks filing a bunch of NODs, but then just extending the
Yeah,
dates.
that's what they've done.
They've
That's what
extended,
they've done.
okay.
Yeah, they got 90 days then to file a notice of sale, but a lot of times you'll see they'll file an NOD and they won't file the notice of sale for a year later.
Yeah, well,
There's no time limit on it.
There's no time limit on.
There's only a time limit on the notice of sale. Once they record the notice of sale, they have to take it to sale within a year of the notice of sale.
Is that even with the borrower signing, saying we allow you to extend this?
That's right. They can't.
You could do
They
like
can't
3.
waive that right.
Okay.
Yeah, that requirement they actually did away with the trustor's request postponement quite a few years ago, and now under the new rules, they used to be able to postpone them forever. In fact, I once bought a house at the foreclosure auction that postponed 1 month at a time for 4 years. I followed that thing until it finally went to sale. So now they can't do that anymore. Now they can postpone it as many times as they want, but once they reach 12 months from the originally scheduled sale date, they have to cancel the sale and re-notice with a new notice of trustee sale.
When
They
did they
don't
change
have to
that?
do a new NOD. That was about 4, 5, 6 years, 5.5
Okay.
years ago, somewhere there.
You
Yeah.
guys are killing me. This is depressing. I gotta say, you know, I think you've got some valid points about the housing market. We're probably at a bottom, you know, Mark, and who knows where we go. But you're right. We're not going to snap back. And as Warren Buffett said, it's probably a great time to buy real estate. I think one of the things we need to realize is what's happening in our economy outside of housing. We had our GDP number for the fourth quarter just raised up to 3%.
Mhm.
That was a surprise to the market.
Retail
We're seeing
sales.
Consumer confidence is
Yeah.
coming way back. We know historically when consumer confidence recovers, the stock market has a very good,
Falls.
typically 20% return off the bottom of.
Still gotta have
consumer
employment though, that's the problem.
And we're seeing
Yeah.
that come back. We saw just initial jobless claims come out on Thursday every week.
Yeah.
We're at 350,000, we were at almost 700,000. So there are real improvements coming. And those are the things that are gonna help the housing market come back as banks heal their balance sheets and are able to start lending again and jobs are being created. It's gonna be a gradual process, but I think frankly, the outlook from here for the next 5 years is gonna be very positive. But you're probably right, the housing market is gonna be a little bit slow on the upkeep because of the inventory and the banks cleaning out their inventory.
Well, I think it just means we're just not, real estate investors are not gonna be able to look forward to appreciation as a method of creating real estate value over the next 5 years. I think that'd be unrealistic. Like, you're gonna buy for income, you're gonna buy for equity creation via fix and flip, but the buy and hold strategy for real estate is not going to be a big one.
Bruce, we're gonna have you on again. You're quite the wealth of knowledge.
Oh, well, thank you for having me.
Appreciate
It's been a pleasure.
Absolutely.
Yeah.
Okay, here's our thoughts for the day. Why do they put pictures of criminals up in the post office? What are we supposed to do? Write to them? Why don't they just put their pictures on the postage stamp so the mailman can look for them while they deliver the mail? Isn't that
Good
good?
point.
Like that? Okay. And since there's preparation H, what happened to preparations A through G? Ever thought of that?
You don't wanna know.
We don't want to
Fair
know.
products.
Okay. Tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. And that's a wrap.
That's
That's
a
a
wrap.
wrap.
Hey,
Excellent.
okay, keep